A trade war between the US and its neighbors, Canada and Mexico, appears to be averted for now, but the sell-off on Monday shows just how vulnerable the global economy may be. Joining us with more on this is a reaction in Europe. The DW correspondent Chipondo Chimbelu is joining us from Berlin. Chipondo, just how prepared is the EU, for these potential tariffs?
Thanks for having me. Well, European leaders have said that they would retaliate if Trump were to impose tariffs on the bloc. Now, the EU is the US's fourth biggest trade partner, and US President Trump has been calling for the EU to buy more US goods. Now, at the end of 2023, the US goods trade deficit was 155.8 billion euros with the EU. Now, that's according to Eurostat data. But when it comes to services, the United States had a surplus of over $100 billion. Now, European leaders have been reportedly trying to prepare for any potential tariffs by drawing up lists of US products that they would target. But the real test will really be the EU's unity. Now, in the past, that has mainly depended on its two biggest economies, which are, of course, Germany and France. And right now, their political futures are uncertain. Later this month, Germans will be heading to the polls in an election that will determine the next government. And the French Prime Minister, meanwhile, may be facing a vote of confidence this week.
Chipondo, so which industries in Europe would be most vulnerable to the US tariffs?
Well, chemicals, vehicles, machinery, and other manufactured goods make up the bulk of EU exports to the US. And it is the auto industry that is the most vulnerable. We already saw that on Monday, even just with the threat of US tariffs against Canada and Mexico. Now, that's because European car makers have operations in both countries, which they use to manufacture cars for North America's biggest market, the United States. Now, sometimes car parts travel across the border several times during production, and tariffs would have, of course, cost the auto industry billions, especially in Mexico, where they do benefit from lower wages. And interestingly, the automaker that is most vulnerable to tariffs because of its operations in Mexico is Europe's biggest car maker, Volkswagen. And of course, Stellantis Tool, which owns Peugeot, is the second most exposed European car maker. Now, shares of both companies were down more than 4% in Monday trading.
Chiponda in Berlin, thanks very much for being with us.